Hi, fellow traders. This is a continuation video of the video that I released earlier today. I analyzed to go long with USD JPY, and unfortunately, that first trade was down immediately. And after I've done the review, I noticed that there's something important about Murray math levels that I wish to share with everybody. And also in this video, I'm going to cover the topic about revenge trading, which I do all the time. Okay, let's start. Let me share my screen. So, let me maximize this screen. One moment. Okay. So now, I, what happened was the Murray math levels that was showing on my video that we capture, we can see that the orange level is 143750 is the same. But then as the market became more volatile, as the pair became more volatile, the next level down, which is -18 on my video, is 143555, whereas with the market volatility, you can see that the gap between these two levels increased. So instead of 555, it has reduced to 359. So my original stop loss was around here, uh, that was recorded in my video, and my MT5 it moved, so my stop loss was taken out on USD JPY. I lost, and then we can see that the Murray math level moved. So from what I understand about Murray math right now is that it's a dynamic support and resistance level sets of levels. So when market is extremely volatile, the gap becomes very big between the levels. When it's less volatile, it narrows down. And when the hourly candle actually touch the extreme levels, which is this extreme overshot, overshot. And if the candle closes there, the whole entire range of lines, right, will just move down. And then this level might become level 4 for the next range. So that this is the part about Murray math that levels that I wanted to share with everybody following the earlier video. So let's move on to the next slide. This next slide is actually about revenge trading, which is something that a lot of um, psychology or different experienced traders, they keep sharing that we shouldn't be doing it. For myself, on the contrary, I'm a firm believer that as long as I'm within the budgeted amount that I'm prepared to lose in a day, which is 4.9% for a prop from account, I will just trade whatever way I want and to the last cent possible. And it's a bit unfortunate that the first trade that I shared with everybody on USD JPY I lost, but then I revenge traded. And this is the outcome that I'm going to share with everybody. If we look at the slide again, so you can see that I lost on USD JPY over here. I lost 420. And then I waited on pound JPY, which is a pair that I trade daily, almost daily. So I was looking at the 15-minute chart and at the Murray levels. I can see that there's a consolidation attempt to try to break out. And I think it was around 2:30 UK time, which is where the stock market opened, where it continued to drop further. Then suddenly there was momentum to come up. So how I use Murray math in this situation, right, is I bought somewhere here and my stop loss is somewhere around this level. So if it crossed this next key level by a lot, I will just cut the trade. But as what I expected, right, it bounced off this level And where did I set my TP, right? I set it exactly at this level of 5.8. So when there's a bounce off into 3.8, if it is strong, it is likely to hit 5.8 without any problem. So if we were to look at the chart patterns on the 5-minute chart, it looks like this. And if we look at the RSI, it's in sync, right? Because now it has touched or is touching 5.8. The RSI is only at 70. So it's quite safe to TP right at the 80 and then we are out. Of course, in an extremely bullish situation with big news, then this RSI either stays up or just come back down around 50. But then when it comes down a little on the candles. But then on RSI, it goes down to 50 and then it keeps bouncing back and forth. And it can be a very long bull trend as well. So just wanted to share with everybody that revenge trading does work sometime. And I hope this gives you more insights into how Murray math works and how all the different components from the candle patterns to RSI. It helps us to stay in the trade better. I mean, I was really tempted to let go of the trade while when I broke even and just made a little bit, maybe 200-300 instead of the full 500. But then what helped me to stay in the trade was I look at the RSI and I look at this level. I'm very sure it will touch before there's retracement. So it's like at this point here where the red candle appear, I was like positive 700 plus 800. So if I minus the losses, I would have a pocket 800, right? And then it went down and then down some more. But I held on to it because of this indicator here, RSI, and also the belief that when price move, they will go to key levels before something happens. So that helped me to maximize my profit. Yeah. With that, I hope I completed the whole sharing today with these two videos. Yeah, to make good of the whole session. Hope it is helpful for everybody. See you in the next one.